This is Fintech Insider News. In the week where the UK got a new government, which, according to our poll on LinkedIn, 36% of you think is a bit meh for the future of UK fintech, we are talking about African fintech Nala raises $40 million to expand their B2B offering, Deutsche Bank launches a €500 million social bond to boost sustainable finance, and does Australian open banking need to go back to the drawing board? Because the Australian Banking Association thinks so. We discuss all of this and much more on today's show, so don't go anywhere.
The time for community banks and credit unions to win is now. While the big players and exciting new challenges grab headlines, regional institutions are at the heart of the banking ecosystem, putting the service back into financial services. Serving their local communities, these organisations around the world have a unique advantage over their competitors. They have deep, established roots with their customers. They offer a local, personal service, and they're not tangled up in the legacy tech mess that the big banks are. To read, watch, and listen to what else we've got to say about them and how they can win, visit 11fs.com/communitybanks. That's 11fs.com/communitybanks.
Hello and welcome to episode 877 of Fintech Insider. I'm Laura Watkins, Director of Media and Marketing at 11FS. I'm joined this week on Fintech Insider News by three guests who are here to break down the biggest stories from the past week in fintech and financial services. Firstly, welcome to my fellow 11 and my co-host for today, Kate Moody, Strategy Director at 11FS. Hey Kate, can you tell the listeners about what you've been working on recently?
At work, mainly been working on exciting things all around the world. Do a lot of fintech outside of work, mainly been working on trying to stay calm during football matches whilst England make a hash of things, but get to good places. So I guess by the time this goes out, we'll have inevitably been defeated by Spain in the final. So never mind. But it's been fun so far.
But today we can celebrate the fact that we've made it to the final. So, swing the roundabouts.
So I'm happy. But yeah, great to be here.
And please also welcome to the podcast a familiar favourite, Simone, Joyce, founder and CEO of Paypa. Welcome back to the show, Simone. It's always great to see you. And we have found out today that Simone is joining us from Brisbane. It is currently 1 a.m. We are so grateful to have you here. How are you doing? And how are things with Paypa since we last saw you?
Thank you, Laura. It's lovely to be here. Always happy to get up for 11FS. Things have been great at Paypa. We've got a lot going on in many hemispheres, so it's always a busy time, but we can talk about that at another time.
Great. Well, thank you so much for joining us. And last but not least is a warm welcome back to the podcast for Benjamin Fernandes, founder of Nala. Benjamin, you have some very exciting news, which we're going to be getting onto very shortly. But first, can you tell us a little bit more about yourself and Nala?
Thank you so much for having me on the show. My name is Benjamin Fernandes. I'm originally from Tanzania, currently in New York. And what we do is cross-border payments between the US, UK, and Europe to 11 countries in Africa. So that's our primary business, more initially remittance, now doing cross-border payments as well for businesses at scale.
Amazing. Thank you so much. And I think we're going to hear about all of that and more in just a moment. So let's jump into the news. And our first story this week is that Nala are to use a $40 million Series A to build a B2B payments platform and scale remittance services. So this story was in TechCrunch, but also in many other places as well. Nala's raise is one of the largest Series A ever in Africa, and the funding round was led by San Francisco-based Accrue Capital. The new funds will help the company grow globally, scaling its remittance businesses to new markets in Asia and Latin America. Currently, Nala's app allows users in the UK, EU, and US to send money to 249 banks and 26 mobile money services across 11 African markets, including direct bill payments via mobile wallets like Kenya's M-Pesa. Responding to user demands for comprehensive money management, Nala plans to extend its payment capabilities and expand its B2B platform, Rafiki, to support global businesses with payments in and out of Africa. And of course, we're lucky enough to be joined by Nala CEO and founder Benjamin. So congratulations. How excited are you about this raise, and what more can you tell our listeners about it and the plans for the new developments?
Thank you. It's definitely exciting. I think the team, when I told the team a while ago about the raise, and then it was cool. We had this mini celebration, but then seeing it all over the news and so on, we had a different energy at the office yesterday. So it was nice and special. I know the team's been working really hard, just for context. The last 20 months, we've 34x transaction volume. The last 10 months, we've 10x revenue. We became profitable in February. And like these are definitely no easy feat for us as a team to be able to do overnight. Lots of hours went in. And so definitely very, very proud of the team and like a lot of the work that we've been able to get here. Definitely feel privileged with the fundraise for sure. As you mentioned, it's one of the largest in Africa, but a lot of our office is actually in London. So also probably one of the largest in Europe for a Series A ever, probably. And, being able to sit and look at that is a lot of privilege for us, but also a lot of responsibility. One of my board members tells us always, he says, Benji, always remember, the chef doesn't celebrate getting the ingredients. So, it's a great milestone, but, it's also time to build something amazing and scale our business from where it is today. And so the responsibility on us is even larger than it's ever been before.
I love that saying. Like, I don't know, that's just really inspiring, puts things in perspective for sure. But nonetheless, huge congratulations to you and to all of your team for this achievement. Can you tell us a little bit more about the expansion into LATAM and to Asia? Why those particular geographies and sort of what are the challenges and opportunities in that space for you?
Yeah, so I think a lot of people have kind of slept on cross-border payments and even, let's say, the category of remittances. So the way I look at technology is every 10 years, I think the same business is reinvented at scale. So for example, 10 years ago, actually more than 10 years ago, 2011, TransferWise was launched. 2011, Remitly was launched. 2009, World Remit was launched. And, Remitly and Wise, they are publicly listed companies. World Remit, 2021 valuation was $5 billion. 2014, Sendwave was launched, which World Remit acquired for $500 million. 10 years later, you see this new phase of cross-border payments for remittances. You see TapTapSend launched in 2018. You see Nala coming in 2021. And there's going to be a few more that pop up here and there that are trying to solve this problem because I think there's a few patterns to keep in mind. One, migration is only increasing globally. And so a lot of people specifically from the global south are migrating to Europe, to the US, to Australia, many different places around the world for better opportunities. And if you actually look at this at scale, I actually think people are emerging markets' greatest asset. And let me explain why. If you look at a market like India, India's total export volume last year was $468 billion. Refined petroleum was the largest category of exports, which was $76 billion that it brought to India. But people abroad from India sending money to India brought in $125 billion. So as a single category, just the remittance diaspora formal market was, 1/4 the entire country of 1.3 billion people, entire export. And so I think, if you look at India today, 1.3 billion people, about 1.2 million people leaving India every year. So the market size for remittances is actually growing and growing faster than most people realize. Now, let's say you're a migrant from India that moves to the US or moves to the UK. You probably had some credit history in India. Now you move to the UK, like you're 35, let's say you're 40 years old. All your credit history in India, doesn't even really matter in the UK because most banks won't take you up. Most banks see you as oh no, you're a new migrant here and so on. So there's all these services that migrants can't, take control over while they're in these foreign markets that are new to them. And, I think that's the opportunity in cross-border payments that we see at scale is a lot of people, migrants. So the market I know really well is Africa. I'm from Tanzania originally. I used to use those services when I'd send money back home. And I'd look at the FX spreads that companies are making. I was like, this is ridiculous. And the reason why those spreads are really large and the reason why Africa is the most expensive place in the world to send money to is because there's a huge dollar shortage. So how do you increase the amount of dollars coming into the market by increasing trade into the region? But also what's most important is how do you give people control of their money? When I interview customers, 8 out of 10 of our customers tell me that I don't believe that the money is 100% getting used for what it's being sent for. So let's say I was sending Kate money and Kate's like, hey, I need money for a hospital bill. Okay, I'd be like, hey, I need $1,000. But actually the hospital bill was $800. And the 200 is just extra hey, just in case, emergency money and so on. But people would rather have full control and pay the bill directly from the US or the UK or Europe and have more control of money. And people are willing to pay a premium for control. And I think those are the different patterns of what's interesting. With Africa alone, you have a population of 1.2 billion people today. By 2050, it's going to be 2.5 billion, making it the largest population in the world, the largest global workforce. And I think what's fascinating is that shows a market size that's increasing at scale quite rapidly. And so on the consumer side, that's where the business is focusing on. Beyond the African continent, we're going to be launching India, Pakistan, a few markets like that, and then Latin America after that, because migrations only increasing over the next 10 to 15 years. And we're trying to play long-term games here for those migrants who are often overlooked.
Amazing. Thank you. Well, that was super comprehensive. And I think I learned a lot just from those few minutes. Kate, what were your initial thoughts on this one?
Yeah, I mean, I suppose this is a bit awkward, right? I mean, Benjamin, you were on a show a while ago, and I was so impressed when you articulated kind of your vision, I think, for NADA. I can't remember when it was, 2022, 2023, whenever it last was. But I've been kind of following what you guys have been doing ever since, and just super impressed with what you've been building out as a team. Listening to you speak just now, you can absolutely understand the raise. Like, there is such a clear opportunity here. I suppose I'm really interested to there's such a clear kind of customer problem. I'm really interested to see how you move into this B2B space. I think I kind of saw from the information you released around the raise that currently kind of the consumer revenue makes up about 90% of your current revenue, which is, as you say, been growing astronomically. So I suppose I'm intrigued, like, you've got such a clear end customer problem and connection to the end customer problem. How do you continue to grow on that side where, as you say, there's still a ton of stuff to be solved, whilst also growing the B2B side of your business? Because it's hard to kind of chase two really, really big problems at once, right?
It's a great question. We never wanted to build any B2B service at all. It was never the intention, never interested in even doing it. So what happened is, when you're starting to build just the remittance product and starting to scale across a few countries, reliability was a massive problem. Like, think about it. Across Africa now, I think we work with over 300 banks and then 26 mobile money services. It was 250, now it's 300. And each one of these, you're relying on local banks in, like, let's say a small country, to have engineering teams that are ready to have error reporting on their APIs, balance checks, fraud detection, all these things that don't exist. And they don't have maybe budgets to hire a big engineering team to help you get there. So now what happens is, in these markets, while you're trying to increase reliability, what we were noticing in a lot of our corridors, reliability rates, even with the best partners there, were about like 91 to 92% at best. On average, it's closer to like 85, 86%. So when you start doing small transactions of 100, okay, it's fine. 1,000, okay, it's fine. Like, your customer support starts to pay in a little bit more. You try to do 10,000 transactions a day, then 100,000 transactions a day. Then you have some serious problem where the scaling cost didn't make any sense, because I'd had to hire way more people on the customer support operations team just to manage all these failed transactions of something that's not even in our control. And so while we would sit down with the banks and tell them, hey, can you fix this? Can you fix that? It would made it very clear to us that it wasn't going to be a priority for them anytime soon, because they also don't have the budgets to do that at scale. Now, if you look at markets like Latin America, you have dLocal. Asia, you have Airwallex. In Africa, you don't have any of those things that exist at scale that can help resolve these problems, not just for us as NALA, but for global businesses that plan to operate in the region. For example, Netflix operates in maybe 3 countries today. In Africa, there's 54. If it wants to operate in 54 countries in the next, let's say 20 countries in the next 10 years, it's not going to go and build local integrations in each one of these markets. It'd rather connect to one single API that distributes across, let's say, 10 countries and allows them to do collections in those markets. So while we were just trying to solve that problem for the NALA consumer business, we ended up having to build Rails just to increase reliability for our own consumer business. Now, we were just building it for ourselves, and now a bunch of remittance companies started reaching out to us saying, hey, Benji, we see people mentioning NALA's reliability is really high. Can we discuss it? So we would compare data on reliability rates for payouts. And because we have a lot of direct integrations with banks or telecoms such as M-Pesa, reliability is naturally going to be significantly higher. And people were like, hey, can we use your Rails? Can we use your Rails? And that was the question that kept coming up from other people. So we signed on Kadana Pay, which is a global payroll business based out of New York that does payroll in Africa. They use us for payouts. TransferGo, that's based in Europe, they use us for payouts across Africa. So companies like these large-scale remittance, global payroll, payments processing companies would reach out to us. It's like, hey, we want to increase reliability. We're willing to pay a premium for reliability because the cost of not having reliable payments, let's say for global payroll, and someone's monthly livelihood is stuck because of something that's not even in their control, companies would tell us they'd pay a premium for it. So, Kate, we had to make the hard call to split the business completely. So now we have a Rafiki team and we have a consumer team. So it's very similar to what Square did with Square and Cash App, or what Wise has done with Wise Consumer, Wise Business, Wise Platform. They've held it as one organization. Or Niam in Asia had Instagram, and now they have Niam, which is their B2B platform. So it's a pattern that you've seen other businesses do. And, I see there being a massive opportunity for us there. And we've split the company completely separately, like different person running different teams. Like, the only teams that overlap are finance and HR, but everything else is completely separate. for Rafiki and Nala.
Amazing. Well, thank you so much for that. I think just the sheer value of the opportunity space that you've found and how you're kind of pursuing it is really fascinating. Simone, let's bring you in. We're running out of time slightly on this story, but what were your kind of reaction to this?
I had a question for Benjamin, because it's fascinating. I could listen to you talk about this all day. But one of the challenges that I've seen repeatedly in different markets is the ability to connect deeply into the payment infrastructure of the country that you are trying to do business in. And obviously that's different country to country. Is your preferred model to, where possible, now that you've built this infrastructure type rail system, to connect deeply in and directly into the payment infrastructure of the country? Or do you really preference for sponsor banks to help you sort of conduit you into those payment infrastructures? Are you finding that to be a big challenge as you think? Yeah,
it's a huge challenge that varies country by country. So for example, in Africa, we've applied for 9 licenses, and some of these licenses take up to 2 to 2.5 years to get. So we've just got about half of them right now, even though I applied for them over 2 years ago. So Kate, probably when I was last on the show, I was like going through a deep application process. And I think that's the challenge. So Simone, like, in order to bring on third-party players to use you guys for payouts, you can't just use a sponsor bank. If it was just for Nala, it's fine. But like, in order to bring on third-party players, you'd have to get your own like PSP license or payment aggregator license equivalent in the market in order to bring on third parties, especially because there's a lot of compliance reviewing of AML, CTF checks, who's sending money, where are they sending money to, and what's the purpose of the transaction. So we are responsible for that ultimately as Nala and Rafiki now. So I would love to just be able to plug in. And even with the sponsor banks, we do work with a bunch of sponsor banks across Africa. Reliability is still a challenge. And I think, I'll give you an example. Last week in one of our biggest markets, payments were failing Friday, Saturday, and Sunday. And I called our treasury team. I was like, what happened? And they're like, we sent them the money for pre-funding on Thursday, or Wednesday. And, so I called the CEO of that bank and I was like, hey, what happened? He's like, I guess our treasury person forgot to credit your account before they left for the weekend on Friday. And so all of our transactions, and then we have customers super upset at us and like cussing us out, cussing me out, whatever, cool. Like go on Twitter, I'm tagged in a bunch of stuff. I'm like, great. An example of that, of working with a sponsor bank, is completely out of our control. And so that's why for us, like as much as we can solve those problems, because if that's happening to us and at the volumes that we're doing, imagine all the other global businesses and that's not a random small bank. That was one of the largest banks in that country. Imagine how many other people are affected, especially at scale and if you're trying to build responsibly. So I think that's the challenge with trying to go with a sponsor bank versus just having to build directly your own.
Fantastic. Thank you. I mean, I think we could happily talk about this for maybe the rest of the show, but I do have to move us on to some more stories. But again, congratulations. And hopefully you'll come back and join us and tell us more about how both Rafiki and Nala are getting on in the future. But moving on to our next story, which is that Deutsche Bank launches a €500 million social bond to boost sustainable finance. So this story was in Fintech Global, and the German bank says funds from this bond will support affordable housing and essential services for elderly and vulnerable populations, contributing to the bank's sustainable asset pool. This social bond aligns with Deutsche Bank's Sustainable Instruments Framework, guiding both green and social financial instruments. The raised funds will support loans and investments aimed at fostering a clean, energy-efficient global economy and societal progress. The bond is part of Deutsche Bank's broader ESG issuance program, which began in 2020 with its first green bond, aiming to further the sustainable finance market and support clients in achieving climate-friendly and socially sustainable goals. Okay. There's a lot of information in there. How are we feeling about that straight away? Kate, are we feeling positive, negative, cynical? What's your take on this?
Oh, like a mix of all of the above.
Okay, tell me more.
I guess, we talk about ESG a lot, right? And I suppose it's been fairly clear up until, we've seen a lot of progress towards the E of that. Like, green bonds have been around for a while. I'm absolutely not an expert in this space at all. But my understanding is that these social bonds are still relatively new in market, and bonds focused on really trying to identify opportunities to like intervene in economically proven sort of social problems. So, underinvestment in deprived communities. Actually, if you can get the money in early enough, you can really, really see and drive returns. And there's lots of kind of economic analysis to kind of show that. So I suppose on one hand, I think it's good that we're starting to see some more of these sort of social funds emerge as part of the kind of the wider excitement around ESG. I suppose I have an inherent skepticism every time any big bank makes a big song and dance about launching anything like this. Obviously, 500 million is a big number, but my understanding is that, when Deutsche Bank initially sort of launched this fund, they were talking about 500 billion. And so I think they were aiming to achieve that by 2025. So it sounds like it's taken them quite a while to kind of get this out, and they're maybe not necessarily hitting the targets they're aiming for. But yeah, I guess anything which is giving people options for their investments, which are focused on driving social good, absolutely, well, obviously behind that. But you worry sometimes that banks use these types of things to cover up other parts of their business models, which are maybe less PR friendly.
Yeah, definitely. I think it's it on the surface it's good news and sort of should be taken as such. But yeah, there's a tendency potentially towards cynicism. Simone, what were your thoughts?
I think I'm okay with the cynical element of this. I mean, obviously this is has to make economic sense for Deutsche Bank to commit to such a program. But if you have a look at some of the other things that are happening across that org, and yes, they've still got a lot of long-term investments in non-renewables and some of those really unfavourable industries, but they've also got, I read a stat on their website that says they've got a third of their long-term bonuses are now linked to sustainability and social objectives. So when we start shifting how people are thinking about success in their roles, I think you're starting to get into the core infrastructure, even if you're not seeing it through their full product range yet. There might be some slight virtue aligning happening here, but if this is going into housing affordability and accessibility, that's such an important thing at the moment. I think Germany's only got and I say only lightly, a 6.5 times income to home affordability ratio, where in Australia at the moment it's like 16.4. So I think if this works, I'd love to see it roll out more widely across the world, where there's such a demand for affordable housing and such a demand for that social plus return on investment. I think will give it long-term sustainability.
Yeah, and I guess that was the thing that I found interesting about social bonds when I started to look, when you sort of start to scratch beneath the surface of them. I think you often sort of see the ESG stuff might get pumped into like less developed markets, but actually it's often the more developed markets that have the biggest social inequality gulfs. And so that's kind of where I think investors see the opportunity. If you can kind of actually get money in the right places, if you can help correct some of these systemic problems that are meaning that people in these developed countries are still experiencing such tough lives, such reduced outcomes, then you can see a commercial benefit. So yeah, really interesting.
Yeah, definitely, especially if they're putting their sort of success metrics of the individuals against these initiatives as well. And also just that there's a growing demand from investors in this area, like the sort of ESG investment is massively growing in popularity. Is this kind of a general idea of investors being more conscious around where their money's going? Like, Benjamin, is that something you've experienced?
Honestly, like when we were raising this round, a couple funds, mostly European funds, asked us for our ESG policies. I don't think a single American fund had asked us for our ESG policies when we were raising this capital. So I think it was definitely very European focused and prevalent. I was asked about our ESG policies during due diligence, or even during the time where we were like talking to funds about investing in Nala. So I definitely think regionally, at least from my perspective of just recently going through a large fundraise, I definitely see it heavier for sure in Europe versus in the US.
We get asked about it a bit, not so much from an investment perspective, but when we go through procurement cycles, our clients tend to be tier one banks and other similar organisations, and they have the paradigm set up now that they need to care about certain aspects of ESG. So it becomes a checkpoint on a procurement sheet for us at the moment, which is interesting.
But I suppose if I'm indulging the cynical part of my brain, part of me again wonders how much, if big banks are putting ESG requirements onto their partners and their suppliers, if investors are putting ESG requirements onto the companies they're investing in, that's great. But do they also then reflect that back onto themselves? Or do you kind of use the fact that you are expecting those standards of people that you are working with or funding to kind of give yourself the clap on the back of saying that you are making a difference? Whereas, I don't know, again, maybe I'm having an overly cynical day, but I feel like you want to see this lens being applied like across the whole spectrum of financial services. And I definitely think that is happening. But I think Benjamin's very right that it's probably happening in certain areas more than others, and maybe it's happening within sort of sections of the market more than others.
Yeah, definitely. And to sort of add to that, to give them some credit, obviously we know about their sort of fossil fuels financing and so on that Simone alluded to, but are they trying to roll this back? Are they trying to improve their reputation? Like, I imagine it's quite difficult to undo many, many years of kind of investing in a certain way. I guess they have to start somewhere. Should we give them credit for that? Simone, what do you think?
As you said that, I try to envision then not just the practicalities of unwinding such long-term investment into the same sort of industries, but how do you then continue to meet the expectations of, and coming over to Kate's cynical side of the fence, of I still think there's the majority of Deutsche Bank shareholders might be perfectly happy for Deutsche Bank to continue their investment practices into less sustainable industries. I think it's going to be a slow progression to get to 100%. There are some smaller banks I can think of, certainly in Australia, and I think in the US as well, that are, B Corp certified. That's really hard, and you've got to go deep and long to get that certification. None of those banks are huge. So I think the more nimble you are, the quicker you can probably get to a full, we are confident that our ESG goals are being met through all of our investment strategies. The bigger ones are so entrenched, and it's difficult. I'm glad that's not my job, but I'm hoping that they can figure it out soon.
Yes, I think the climate emergency might need them to. Benjamin, final word on this from you. Maybe just talking about the sort of social side of things that Kate was talking to, like the sort of the E side of ESG has taken a lot of the limelight recently. Is it quite encouraging to see like the S, the societal, the affordable housing push take center stage on this one?
I have mixed thoughts on this one because I think there's a lot of BS policies in many companies. I'm just keeping it 100. And I've just seen so much, oh yeah, this is what we're going to do. This is our ESG policy. Oh, we shouldn't be taking these many flights and all this. There's some perspective about things, but what I'd love to see more is action versus like talking about it. My mom always tells me, Benji, if you don't take responsibility, you take orders. And that's a principle of life. And I've seen that all the time with my work, but with a lot of organizations that say, oh, we're going to do this. Okay, we're going to drive this socially, whatever. Like, I would love to see some more public action being truly taken on it versus I think the overburdened mentorship and discussions about ESG versus the true actions for me don't match up. And I think that's where I'd love to see more action being taken.
I couldn't agree more. And I think that is a fantastic place to leave this story. So on that note, we're just going to take a quick pause and back shortly. Welcome back. Before we get into the news, we want to let you know that nominations for this year's 11FS Awards are now officially open. We want you, our amazing Fintech Insider community, to tell us which brands have been constantly evolving, making waves, and driving real change for their customers this year. There are 11, of course, awards across 5 categories up for grabs, and you can have your say right now at 11fsawards.com. Back to the news. And our next story is that Australian Banking Association says that open banking rules need a new pathway forward. This story was in Payments and says that the CEO of Australian Banking Association has said it's time to go back to the drawing board when it comes to the country's open banking rules. 4 years after the implementation of Australia's open banking rules known as CDR, or Consumer Data Right, recent research found that only 0.31% of bank customers were using this right to share data between service providers. And furthermore, 50% of data sharing arrangements were discontinued or allowed to lapse in 2023. 1.5 billion Australian dollars was invested into CDR since 2018, and the other digital innovations in banking had materially higher customer uptake in the first 3 or 4 years after this launch. This research also found that CDR is negatively impacting smaller banks and their ability to compete because they incur disproportionately higher compliance costs, with commentators asking for more competition in the market, which was supposed to be the original aim of the project. Simone, let's come to you first on this. As the Aussie in the virtual room and former chair of Fintech Australia, can you set the scene for us on this? Is 0.31% as bad as it sounds, or is it too early to tell? What do you think?
Well, I think that we need to take that figure with a grain of salt. If you have a look at where that figure's come from, it's a portion of the ABA's members that were surveyed, which is not a full roundup of all of the banks. It's very difficult to get an accurate read on, in fact, how many data requests have been sent across the network because those things are not ubiquitously recorded. So that's probably one action point that we can take. I think that Anna Bligh, the CEO of the ABA, I think her words are strong here, but it's not all bad. And I think that reading into some of the complaints that are being made by the ABA, it actually aligns to a lot of the narrative that fintechs are putting into the ecosystem at the moment as well. Yes, it's a very complex regime. There's a lot of overburdensome rules. It's a tricky consent path for consumers. Those things are aligned with what the complaints are coming back from some of the mid-tier and smaller banks. So I actually think this is a really positive report to really stimulate some more narrative across all of the CDR community. Do we need to go back to the drawing board? Maybe not entirely, but I certainly think revisiting the original plan and going, are we on track for the goals, would be really helpful. CDR's 4th birthday a couple of weeks ago. And I think that everybody who was invested in designing this regime probably thought we'd be in a different spot right now. Doesn't mean it's a failure. It just means we have to make some adjustments in order to reach its true potential. The final thing I'll say until I and open it back up to everyone else to comment is that it's interesting to hear banks commenting about the competition mandate of CDR hasn't been met when there's a lot of data about how many calls have been made and how many, there's a lot of talk about how many calls have been made, but nobody seems to have checked in with the consumers that have used the tools to find out if it actually helped them make a decision to purchase a different product or find a different loan. So it's not about competition for banks, it's about enabling people to have more choices. And so I think that's a slightly different bent. This wasn't for the banks, it was for consumers. And this report very much seems to be about what's happened to the banks as a result.
That's a really interesting reframing of it. That definitely puts things into a different perspective. Kate, as our customer strategy director with your customer hat on, what was your sort of thoughts on this, particularly around the sort of appetite for digital banking remaining high, but then is it then even more surprising that the adoption is low? What do you think is the sort of like missing piece here?
I mean, I guess we've seen from multiple markets that have been rolling out open banking is, it's very rare to like nail it first time, right? This is a complex space where you are sharing highly sensitive data. Everyone is obviously like being very careful to try and do that iteratively, to try and do it in the right ways to maintain trust. I suppose what I think we saw, and I've not been super close to kind of specific use cases of open banking within Australia, but certainly what we've seen in the UK, for example, is that it took lots of the big financial institutions just to kind of get to the first like big ta-da of, oh, look, you can see all of your bank accounts on the same screen. Isn't that amazing? And I suppose for customers, it probably did have an initial impact of like, oh, okay, this is cool. I don't need to like log into multiple apps anymore. But once the novelty of that wears off, actually what customers are looking for is for stitching those accounts together to actually, as you say, enable you to make a better decision, to help you make a smarter choice, to make your money go further, to get to the month like with slightly less money taken out of your savings accounts than you did the month before. So, and I think that's where we've seen in the UK, and I'm sure in other markets too, like financial services organizations struggling because importing all the data into the same space was a big shift in and of itself. But then actually being able to interpret different data streams, connect those together to make informed choices without straying into the boundaries between like advice and guidance and all that sort of stuff. People are still trying to work that out. And so customers are really looking for open banking to drive better outcomes, to help them with what we talk about jobs to be done at 11FS, to help them like achieve things they're trying to achieve in their life. And at the moment, I think open banking is just helping people to put information into one place. But customers expect, in the world of digital, customers expect You're used to your Spotify algorithm, which doesn't present you with like, here's 55 bands you could listen to. Your Spotify algorithm says like, here's the one thing that you should listen to today that you'd love. And I think that's kind of the baseline expectation for lots of digital experiences now. And open banking's still got a long way to go in multiple markets, not just Australia, to get to the point of enabling that.
Yeah, and open banking alone, as you say, isn't kind of enough. Like it's what you do with it that kind of matters. Because if you ask a customer, do you use open banking? Only the extremely sort of financially literate or tech savvy would be able to answer that yes. And that isn't to say that they're not doing it. They just might not know that they're doing it. I think open banking has always had this kind of make it real for me problem. Like people just don't know what it is if you ask them. And in the UK, like we've had open banking since 2018. Our users are up to like 11%. So it's still not like, mass market at this stage. Benjamin, you were kind of nodding along while Kate was talking there about like kind of use cases and adoption and building. What's your thoughts on open banking and sort of the experiences that you've had?
I would love to see it in America. It's just one market that I think is so behind with compared to the UK in terms of financial services. I really think that, one thing that's interesting for us is the cost of servicing customers in markets like the US is really expensive. I'll give you some data. We have customers in the US, UK, and Europe that send money to Africa. Our average customer in the US sends $1,129 a month. Our average customer in the UK sends $640 a month. Our average customer in Europe sends $803 a month. Everyone's like, oh, there's a cost of living crisis, blah, 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 in the UK. So people are sending slightly less this month than they usually send, and so on. But the cost of me, as Nala, servicing the US customers is quite expensive with collections and, with ACH and fraud and, trying to manage that directly, especially as we scale, despite the US being our most profitable region, and I'm super bullish on open banking. I think it needs to happen more. I do think there's a lot of layers of paint on fintech that happens on top of it. And I think what Kate was describing was really important. I think, historically, you've seen, again, the same pattern repeat itself. 10 years ago, it was mint.com that everybody connected to in the US to like see all their account details and balances and so on. And that was the popular app. Mint.com shut down like a year and a half ago. And there's like Copilot Money and a few of these other apps in the US. And you see the true value is, okay, what are the actions, the decisions, and the insight that I can take based on knowing my financial position? I think so I 100% agree with Kate. I think that's where like, okay, what's next within fintech? Because I can sit on the tube in London and see 8 different ads telling me I get 4% returns on the savings accounts I would store with the same fintech company. And how does that look like at scale? I think the insight is going to be more valuable for me as an individual if we can get there.
Absolutely.
I think that's the crux of the issue, though, with CDR and other open banking that's nascent around the world is the economics of it haven't achieved what the promise of fintech has potentially made to investors and potentially their users as well. The US, you can go and do a screen scrape using Plaid or Finicity and potentially other providers, but that's expensive and largely unregulated until potentially next year when the CFPB's new rules come into play. But until the economics are right, I don't think we will see. We need to get it right because we need banks and data holders to be thinking about CDR as a valuable product proposition for them and for their customers. At the moment, it is a cost center and a compliance cost center, which means it's never getting the best of, okay, how do we use this for our strategy? How do we use this to improve our products and the life of our customers? Because this makes us money. It has to get to the point where the economics make sense. And unfortunately, CDR has not been designed with that at top of mind because it's been designed from such a deep place of regulation and legislation. It's taken all of what that commercial could look like. I'm really waiting for a company to come along and actually go, okay, we've got this CDR as our foundation, but we're now going to create bilateral agreements with the market and with data holders to go above and beyond what CDR allows us to do. There's nothing preventing that from happening. It's just a really tough market to do that in when there's also not the same level of investment in fintech as there was a few years ago when we kicked off the CDR journey, which is another pattern that's playing out around the world.
Which actually slightly links us to the next story. So I might move us there now in terms of the sort of investing landscape. So our next story is Index Ventures raises $2.3 billion to chase AI breakthroughs. In this day and age, it's quite unusual that we've got story 4 on the podcast without mentioning AI. So here we go. This story was from the FT. Index Ventures, the backer of fintech such as Revolut and third-party platforms and tools such as Discord and Figma, has raised a total of $2.3 billion from institutional investors. $800 million of that sum, they say, is for early-stage startups, and $1.5 billion is for larger bets on later-stage companies. More than half of its recent investments have been in AI, and by way of this new fund, they want to take advantage of recent breakthroughs in artificial intelligence, which they believe will, quote, ultimately reshape the entire economy. So that's quite a bold claim. Firstly, do we agree with that statement that AI will reshape the entire economy? Is this a big punt or a sensible change of direction? Perhaps, Benjamin, if I come to you first, what are your thoughts on that?
Yeah, I think it's exciting for Index. Major congrats to them being able to raise and close this round. I think what was interesting when we were raising recently, and if I had a dollar for the amount of times I heard the phrase, "Oh, you're actually building a real business," or emails that actually said that, it's crazy to me. And we got that, my CEO, my CTO, we all got those emails, and I was like, wait, what's not a real business? That was my question. I was like, wait. I'm excited about AI. Personally, I'm very bullish on it. I think there's a lot of opportunity and potential. I do think it depends on how the money is being invested and for what. I don't think AI is going to magically replace jobs overnight tomorrow. The use of AI and people trying to understand how they can use it to reduce costs and be more capital efficient, I think is going to be very interesting and fascinating. And I think there's a lot of potential for businesses there. I do think it's right that Index is looking at investing into pieces like this. I think the markets I know best are emerging markets. So I think in those regions, language is a big problem with AI because, let's say for me, Swahili is my native language. 100 million people in Africa speak Swahili. It's the most spoken language in Africa. Does the language models understand Swahili? Will that happen tomorrow? Probably not. Is there enough data for it to happen tomorrow? Probably not. Will it happen in the next 5 to 10 years? Maybe, right? And I think until that happens, there's a lot of investment into research and data collection that needs to happen at scale in order for that to even be close to being globally world dominant. I think when you think about world domination, often we box it into Europe, US, and maybe Australia in there and Canada. But I think there's the larger population of the world lives outside of those regions, and that's what I'd ask us to remember.
Oh yeah, 100%. I was going to say, do we think that when they say changing the entire economy, do they mean the global economy? Do they mean a specific economy? Do they mean the Western economy? It's quite a bold claim, but to your point, without too much specification on that. Simone, what are your thoughts here? Index, we know, have already invested in a few AI startups, and also that big tech has so far been the biggest investors in AI. Does this kind of open the door for other smaller investors to get on board? Does this open the AI market up a little bit? What do you think?
I don't know about opening the AI market up. I think that this is one of those trends that will be very hot for a little while and then will hopefully settle down. I'm looking forward to AI becoming not the headline, but the enabler of a very cool piece of kit, a cool experience, a cool piece of technology. And I don't think we're there yet. I think this move from Index is laying some clever bets on the companies that will allow it to become not a headline anymore, but will form that sort of base layer for other companies to start building some cooler stuff on top. AI for AI's sake, I don't think is anyone's goal. It has to be for a purpose. And I just think that we're waiting for that big purpose. Will it change the entire economy? I mean, without qualifiers, that might be an easy thing to justify in future. I think it's interesting. In 2019, I had a similar experience, Benjamin, when everyone was asking me, we were building smart payment agreements, but why weren't we using blockchain? Were we really a fintech without blockchain back in 2019? And luckily, blockchain's now found some really good use cases, and it's not the highlight. The actual product is. So I'm hopeful that we see that with AI, but it might take things like Index to allow us to get through some of the weeds and get to that outcome.
Absolutely. Kate, again, with your sort of customer hat on, it sort of feels similar to the conversation we were just having about open banking not really finding the killer use case yet. What do you think on that?
Well, I guess again, we use the word customer and we tend to think about average person on the street. I suppose to Benjamin's point, we should be thinking about average person on the street, not just in Western markets, but around the world. But I suppose in this instance, it feels like the customer is more likely to be like these big organizations, these big companies. We spend a lot of time talking to, working in, partnering with big banks, big global banks. And just from the conversations you hear within those walls, you can hear that there is a hungry customer base for, precisely as we've talked about, sort of AI to come in as a efficiency tool to help them kind of drive down cost, given the kind of the costs that these organizations are incurring. Like, these are significant budgets at play. And so you can see, certainly from the investor perspective, why backing some of these companies, there is a pretty significant customer market to chase. It's just not maybe like the customer market of us. It's a different customer market. But I think it's definitely going to change the world in some shape or form, in the way that, I'm sure blockchain is changing the world, but do we all see it? Do we all feel it every single day? Probably not. It's going to be a sort of just a gradual replacement of all of these rails that sit beneath all the other things that we're focusing on. So yeah, I think kudos to them for raising a round of this size, a fund of this size. And I hope that they deploy it in great companies that are trying to use AI to do awesome things. And I suppose, yeah, again, to go back to Benjamin's point, trying to deploy AI not just to take the developed world and develop it faster, but to really kind of try and grow economic opportunity globally.
Absolutely. And so, you mentioned that obviously the size of the fund there, and Simone, you kind of mentioned on the previous story how we'd had a sort of downturn in funding up until sort of now, really. Do you think we're sort of coming out of that VC funding winter? What do you think? Are we seeing sort of new shoots of investment on the horizon?
Well, I think seeing Benjamin's amazing news at the top of the podcast and this story, I think there's certainly some defrosting. I don't think we're ever going to be, well, maybe not in the next 5 to 6 years back at that height of the hot bubble that we had for a little while, but that's probably a good thing for sustainable companies anyway. So yes, I optimistically think we're seeing some defrosting, some green shoots.
Defrosting is a good way of viewing it. Benjamin, as someone who has recently raised, would you agree with that?
Oh, I mean, this round was tough to raise. And even with us being profitable, like, for context, we generate more revenue than money we've even raised as a business today. And even despite that, like, it was much harder to raise this money. And so I think that was the hard piece, and was tough, because even as I was raising this round, I was like, wow, if it's this hard for us, like, I wonder how hard it is for, like, so many companies that might be very far from being profitable, or maybe not even growing at the same pace as we are. And I think that was very concerning. So, we were definitely very fortunate. We had backers come in, Acrew, DST, a bunch of folks like that came in to try to support us on this round. But I think the market's still going to be a little bit more quieter for at least the next 2 to 3 years before it gets anything even close to what it was in 2021. And I think that, as Simone said, I think that's a fantastic thing. I think for us as a business, when we raised that, our last round was 2022 January, I told the team we're not going to raise another round of funding until we become profitable. And I think that was really hard decision for us to make. It meant limiting our expansion, limiting our hires, limiting what we could do, and being very focused on doing 1 or 2 things really well as a business. And I think that's what helped us get to where we are today. There are a lot of things I would do differently for sure, but I think it naturally forces us to making hard decisions about generating revenue and building something people need. And I think that's important for the industry.
100%. Lessons for all of us, I think. Okay, now for a quick look at a couple more click-worthy news stories this week that we didn't have time to cover in full. So first up, California now forces credit cards to assign special code to gun stores as 16 states ban it. And the story was in USA Today. The Golden State has become the first state to mandate that credit card companies create a unique 4-digit merchant category code, or MCC, for stores selling firearms. On the same day, July the 1st, laws banning the use of such code for gun retailers took effect in Tennessee, Georgia, Iowa, and Wyoming. The MCC tracks the type of business where a transaction occurred without specifying the items purchased, aiding in tax reporting and transaction fee determination. Since the international approval of the gun store code in 2022, states have taken divergent paths, with California and Colorado requiring the code and over 15 red states passing laws to prohibit it. Kate, what was your reaction to this?
Well, I mean, yeah, we've been talking about this story in different sort of guises, I suppose, for a while now, because it's been bounced around. So I guess always interesting to see how much it's actually implemented. And we know from talking about it in the past that it's a very divisive issue in the States. Anything around gun ownership and the right to bear arms, etc., is divisive. So I suppose not surprising to see California kind of adopting it and some of those other states not, given kind of what we know about the general split in opinion in the US on these issues. I suppose it was particularly always like to be particularly sensitive, given that we are heading into a presidential election cycle. So yes, I was interested to see how California actually uses it now that they're rolling it out. Do they use it as a foundation to kind of really try and monitor gun ownership, gun purchasing differently? Or is this kind of just a statement thing that they're using to kind of set them apart from other states and allow them to tell their voters that they are taking action? So it'd be interesting to see. And our next story in this section comes from Fintech Finance, and that is HSBC partners with Visa to develop international money app Zing. Zing enables users to hold funds in 22 currencies and send money in over 30, as well as transact in over 200 countries and territories through a single app and multi-currency card. Visa's partnership provided Zing with a multi-currency wallet and multiple top-up methods, leveraging Currency Cloud and Tink technologies for efficient development and deployment. It launched in the UK in January 2024 and is expected to expand to more markets soon. To learn more, we spoke to Zing's CEO, James Allen.
So it's been great working with Visa and other partners to bring Zing to life. Working with partners has enabled us to get to market quickly with the latest technologies to meet user needs around making international money worry-free. These partnerships also allow Zing to evolve quickly, and since launch we've increased our currency availability, we've reduced our fees, and we've brought lightning-fast international payments to the platform. We're really happy with how Zing is performing. From our App Store reviews to customer feedback, it all validates the customer-centric approach we've taken is the right one. We're really looking forward to continue to evolve our product, grow the UK, and bring Zing to more international markets in the future.
Thank you so much to James Allen at Zing for that little bit of insight and peek behind the curtain. And we look forward to following Zing more closely and seeing how they evolve and what they do next. And finally, a look at something a little more lighthearted from the world of finance. And on this occasion, we are looking at Banco Santander and Google launch free AI course. So double helping of AI in this show. So the story was from Fintech Finance, and the course Santander Google Artificial Intelligence and Productivity is hosted on the Santander Open Academy platform and aims to enhance productivity by teaching AI basics, task automation, and problem-solving skills. It's aimed for anyone aged over 18, available globally in English, Spanish, and Portuguese. Santander emphasized the course's role in boosting job skills and adapting to current and future job market demands. Google highlighted the partnership's goal to make AI education accessible to all, empowering individuals with essential skills for the digital age. Participants will receive a certificate upon course completion. So, who on the panel is using AI in their day-to-day work lives and how? Simone, have you assimilated AI into how you go about things at Paypa Plane?
Well, we have a policy on how we can use AI at Paypa Plane, which is our first step. I'm wondering if I can do this course and very quickly launch a venture for Index to invest in. If I do the course and get my certificate, maybe Index will be interested. In all seriousness, we are dabbling in AI, but we are keeping it very separate from the actual product and actual customers at this stage until we know a little bit more.
And Kate, how about you?
I'm really like an embarrassing troglodyte when it comes to AI. Like, as in, like, colleague, I'm not doing it on principle. I just keep meaning to get around to doing it and just haven't, which I know is really stupid, and I really should prioritize. And maybe, to Simone's point, maybe this course will be what snaps me out of my inertia and moves me into the modern age. But I haven't used it at work. But colleagues at 11FS I know have put a question into ChatGPT and kind of seen what comes out as the first answer and then sort of gone, oh, okay, there's parts of this that maybe might be useful, or there's parts of this that are complete nonsense. So yeah, I'm not using it, but definitely I know some colleagues are, and finding interesting components from what it produces.
There's a bit of a trend of people putting AI images in their, product showcase presentations and things for internal use, which is quite funny. I mean, that's nice, but it's not changing any economies anytime soon. But, it's creeping in around the edges.
Yeah, I feel like we're in the sort of baby steps, sort of fun stage at this particular moment. I would say, like, when looking at, it's quite good for like research and things like that for content creation. What I would say though is every time you ask it anything particularly topical, it just says at my last update in 2022, which means that any kind of news or kind of up-to-date information is at least 2 years old. So it's worth bearing that in mind as well.
I did recently have to write with a friend. We had to write a joint speech for a friend's wedding. Like, we were sort of like best people at the wedding, and so I had to write a speech. And my friend I was writing it with was very keen to try and get ChatGPT to do the majority of the legwork on writing the speech. But it produced some like sort of slightly quirky turns of phrase. She kept asking it to write limericks about the relevant person. But like,
how successful was that?
I mean, they were interesting, but we would have had a speech entirely made up of limericks, which I didn't think was a good idea. So in the end, I wrote most of it myself, and then she just tagged it and put some random phrases in from ChatGPT at intervals just to make her feel better about it. But yeah, so no, I'm probably the person holding AI back. It's probably all my fault.
Just you personally, like
yeah,
just you. If you could adopt it, like we'd be flying by now.
Maybe ask for some haikus next time. You might get some more esoteric, serious poetry.
Yeah,
ChatGPT.
Love a haiku. Love a haiku.
I think on a practical note, like, it is quite good at building a framework for you, and then you putting your kind of own touch on it, particularly for things like writing a speech or creating some work and that kind of thing. Like, it will give you a good sort of framework, even if it doesn't have like the most up-to-date information to go on. There is that quote going around on the internet saying, AI won't take your job, but someone who knows how to use it will. Kate, do you think that's true? Because it's a risk to you if it is.
I mean, probably. Yeah. I mean, this could be my last ever episode. So here we go.
As you said that, it popped into my mind of, I think succession planning is one of the hardest things to do. Maybe AI could help identify the right person to start grooming and convincing to come and help with succession planning. Maybe that's the type of take your job. I can take it in a different way as opposed to AI coming in and actually doing what I do every day.
Not actually taking your job for you, just lining up a good successor for when you're ready to
but
hang up
finding someone. Yeah.
Using it for good. I like it. So a fun note to end on. We were quite tickled by the fact that participants will receive a certificate upon completion of this course from Google and Santander, which feels maybe slightly juvenile. I don't know. What are your thoughts on that? And do you have any certificates, past or present, that you're particularly proud of, Kate?
Oh, I've got so many certificates for like random things.
Oh yeah? Such as? How random are we talking?
Well, I'm not proud of all of them. That's the problem. I got a Blue Peter badge as a child, which I'm very proud of. I think that came with a certificate. So I did it again for our like global audience. That's like a sort of children's TV show where you had to like enter competitions. You got a badge that entitled you to free entry to various museums and exhibitions and things. So that came with a certificate. So I was very proud of that one. I also got a certificate at like a summer camp I went to when I was like, I don't know, 12, for Little Miss Ants in Her Pants, which I was not proud of. I think I remember crying at the awards ceremony because it was basically like them publicly shaming me for like never sitting still. So yeah, so a whole plethora of certificates, some of which I'm very proud of and some of which are actually quite traumatic to think about. So I'm really glad that we've thought of.
Simone, bring it back. What about you?
Well, I'm semi-proud of... I recently just parted ways with a folder that my mother had kept for years, full of 24 certificates printed out on my home printer when I was probably about 12 or 13 for completing lessons in the Miracle Piano Teaching System software program. And I saved those certificates. I cannot play the piano today. The certificates prove that I learnt some songs, but I can't play the piano today. That was a long summer spent on my lonesome with a software program.
It proves that you once knew.
What about you, Laura? What about you?
Literally none that I can think of that I'm proud of, apart from the most obvious, which would be my wedding certificate and my graduation certificate. But one that does remind me of is like, I once went on a school ski trip and they did one of those prize givings at the end where everybody gets the certificate. Mine was sort of similar to Kate's kind of embarrassing one. Mine was most interesting positions while collapsed in the snow, which probably shows you how successful I was at skiing. So yeah, certificates don't always have to be pride inducing.
Everyone knows that skiing is mainly about making snow angels. I mean, let's be real here. So yeah,
that's what I was doing, obviously.
Collapsed positions.
Yeah, I was really good at skiing, as you can imagine from that.
Yes. Great.
And on that note, that wraps up this week's Fintech Insider News. Thank you so much to today's guests. Where can people find out a bit more about you? Starting with you, Benjamin.
Well, if they are on Instagram, hit me up on Instagram, Benji_Fernandes, or Twitter, same tag, same handle, but email is benjamin@nala.com. Probably best. Make your ask very clear, please. Yeah.
And where can people find out more about Nala?
On our website, nala.com, or, just social media as well, but nala.com is probably best.
Fantastic. Simone?
You can find me on LinkedIn, Simone Joyce. I do not tweet, so LinkedIn's the best place to see what I'm thinking. And you can find Paypa Plane at paypaplane.com.
Fantastic. And Kate?
Yeah, my Instagram is mainly just spam of my toddlers, so I would not recommend going there. But yeah, maybe LinkedIn, Kate Moody on LinkedIn, or kate@11fs.com.
Wonderful. And as for me, you can find me, Laura Watkins, on LinkedIn, at 11fs.com, and obviously looking after all things Fintech Insider. Thank you so much for listening. If you like what you've heard, please follow our podcast and don't forget to leave us a review. It helps make a better show and helps others to find us. As always, if you want to join the conversation, find us on social media. Just search for 11FS or Fintech Insider, or email podcasts@11fs.com. Thanks very much and goodbye.
Keeping up with all the noise and news from the world of financial services isn't easy. It's easy to get lost in buzzwords, jargon, and industry speak. So sometimes you just need a quick human rundown of the biggest stories. Well, you are in luck. Bite-Sized is our very own weekly newsletter that takes the biggest news stories from financial services and tells you exactly what's happening, why it matters, and what comes next. Bite-Size goes out every Friday at 11 a.m, so you can enjoy it with a coffee as you wrap up your week. Stay up to speed with the fast-moving world of financial services and subscribe today at 11fs.com/newsletters. That's 11fs.com/newsletters.